Yes, it's going to be a difficult one after lunch. Hope you have a good lunch. But again, it's going to be a very profitable session for you as well. I want to make you a good return on your time. You're spending a day here, okay? And as in all things that we do in the investment management world, I believe in giving you a return. So this afternoon, I'm going to talk to you about PRS. But before I start, I'd just like to, just do a little bit of survey and show of hands, and just say, how many of you have already invested in the PRS scheme? Show of hands. Wow, it's about a third. So I still got 2/3 closure rate today, right? Alright, next question. How many of you within our midst are actually licensed to market the PRS? Well, okay, about 1/3, maybe that's representative. So you got 2/3 of the audience here who are neither investors nor distributors of the PRS. And I take it that all of you here are UTCs, right? Yeah, you're an FIMM convention, and that you are already experienced, you're marketers of the unit trust funds. Okay, so this seminar is for you, whether you're a distributor or as a individual, because retirement, right, happens to be for everyone. All right. Okay. Let me just give you some background as to put into context on what I'm going to paint for you. It's one of the most exciting things to happen in the personal financial landscape in Malaysia. And I did this chart just to trace back, right, to see what was the movers and shakers, what were the events, catalytical events that actually drove, in this case, the private UT industry, right? I've been involved in the UT industry, so I got these stats and say, okay, UT industry basically started, sometime in 1992, as you can see, right? My data is up to 2012 last year. So I wanted to see, at any one point in time, were there some significant shift? By significant shift, I mean game changers, right? That actually move the industry, okay? And to my surprise, okay, not to my surprise actually, and I sort of had a gut feel that this was what it was. And if you can see, in 1992, right, the industry was started and nothing much happened until 1996. What happened? That was when the EPF introduced the EPF Members Investment Scheme. That became a catalytic change in the industry, as you can see. Right? So you can see EPF funds has grown significantly up. Okay? Now, until 2012, EPF funds, and for some of you, or all of you here should be marketing EPF funds, right? It occupied almost 41 billion. Right? And you notice that cash investment, which drove the early part of the industry, actually is still lagging behind. Right? Cash by cash, I mean local investments, 28 billion. Right? So if you look at it and say, okay, if the EPF MIS industry was the first wave, what was the second that moved the industry? The second wave was actually the global funds. Right? And that is sort of surprise, because by the time, we're hitting 2005, right, most Malaysian investors would have already got exposure into Malaysian equities, Malaysian bonds, Malaysian funds. And we are all looking for some access to global offshore funds as a means of diversification or as a means of accessing asset classes that are not available in the local market. And you can see that the introduction of the global funds, that gave the industry another boost, right? Right? So if you look at the age people today, you'll find 601 funds, right? And the proliferation of foreign funds is already there. And we're still adding more into the pot with new fund launches, okay? So this is still going to be a trend going up, right? Trend going up. So if you can mark those events, and I will tell you, PRS, before the end of this session, I hope to convince you this is going to be the third tsunami. So you got to get on board. So where will the fund industry move, right, in the near future? That's the question I want to answer today, and I hope I will make some present you clear observations and clear arguments why you should get involved in this. And the reason why I showed you this chart is because if you look at the Australian superannuation market, superannuation, you substitute the word superannuation with the word pension. Same thing happened. Australia, what's the population of Australia? 21 million, not very big. Do you know what's the size of the pension fund industry in Australia? 1.4 trillion US dollars. It's the fourth largest, biggest fund management industry in the world. Now, how did an island down under, with 21 million, and that is smaller than what we have, with a superannuation, compulsory superannuation contribution by the employer of 9%, our minimum EPF contribution is what? 12%. Went from 0 to 1.4 trillion. We're talking fourth largest fund management industry in the world. It's all about pensions. All about pensions. Okay? So this is a clear opportunity for all of us here. I'm talking about opportunities. Been talking a lot about retirement through the man industry. So today I get a chance to talk to the distributors. So this is a clear opportunity. What is the opportunity before us? Every working population has a need for retirement. Unless you are in a very high net worth category, you may have taken care of your financial planning and you have your financial plans, or your assets are already there. The bulk of Malaysian population, ladies and gentlemen, cannot afford to retire. All right? There lies the problem. All right? As with all marketing, there's no need without a problem. Right? So first we must establish the problem. The problem is this. And you've heard about the EPF saying, right? And EPF has been very successful pillar 2 for the Malaysian retirement. Without the EPF, we are in dire straits. We're worse off than most countries in the world. But today with EPF, the good news is that EPF has sustained a lot of employed contributions, which is good news for the employed population, not so good news for people who are self-employed. So today, if you're a full-time advisor, you're self-employed. What is the level of assets that you set aside? Or do you have a retirement plan? I hope you have, because you're advising people on financial planning and all that. Okay, so if you don't even have a retirement plan, I think you should start today. All right. So what's the target market? What's the working population? Right? Based on EPF numbers, EPF's got 10 million members, but we got 6.7 active. All right. By definition, we will take active as being employed. All right. Active members. Right? 6.7 million. Self-employed sector, 3 million. We don't know, because there are people, coming into the self-employed sector. Very easily, you could open up in a pasar malam store. You can drive a taxi in and out, or you could be a very high-end doctor. So when we say self-employed, it could be a whole range of self-employed, from the lower, I wouldn't say lower income, because these people are cash rich. Right? So part of my challenge is to actually offer PRS to the nasi lemak seller and the char kway teow fella. Right? And I need you to do it. Right? Need you to do it. Do they need to retire? They need to retire, or forever fry kway teow, forever sell the nasi lemak. Is that what life is all about? Think about it. Right? I'm passionate about retirement because it's about life at the end of the day. Right? It's about life. So even the civil service is about 1.5. Right? Budget is coming, and every budget the civil servants will ask, Mr. Prime Minister, can you increase the pensions? Why? It's not enough. It's not enough. And every time the Prime Minister increases the pensions for the government servants, guess who's paying? All of us who are paying taxes will have to pay. So one of the things about retirement is that there's no free lunch. You either set it up now when you are capable of, or when you retire, that'll be too late. So if you want to know what's the market size, 11.2 million. Right? And it gets more exciting as I go along, right? So that's your market size. How many of you have seen this logo? I hope all of you have seen this logo. We launched an ad campaign, the brand for the PRS. Prior to 28th August, PRS exists as 3-letter words, private retirement schemes, no brand. Right? So you've seen the parrot ad, you've seen some of the, heard some of the ads in the radio. What we're trying to do is drum up awareness level. All right? So as in anything news, PRS was launched November, the first scheme was launched in November, and we're still running in. There are still providers who are launching schemes, right? But less than a year, coming up to a year, and I can tell you, right, the awareness level that we are after, okay, I'm after building 25% awareness level in 2 years. So if I build awareness level for the PRS, guess what you should do? You should stand behind it, isn't it? Right? Versus if I go and see you and say, do you know about PRS? I'll take it that you know PRS. Yes, I know PRS, but how do I sign up? Who do I see? What do I do? You know, they need advisors. They need advisors. So, what's the private retirement scheme? Couple of words. It's voluntary. Right? This distinguishes the PRS from the EPF. Right? And half the time, when you hear a objection, it is, oh, I have EPF. Well, is EPF sufficient or not? Oh, EPF is guaranteed. PRS guaranteed or not? Right? So these are some of the common things, but these are very, very basic. I would say it's not even an objection, it's a lack of understanding, lack of awareness, lack of information. First thing is voluntary. That distinguishes us from the EPF. EPF is pillar 2. PRS is pillar 3. Voluntary. It means all of you who are self-employed, you must have a PRS. Then you say to me, well, I'm invested in property, I've invested, I've got money in deposits, I've got money in the bank, I'm in the stock market, I manage it. Yes, very well. Those are all accumulation money management instruments. But have you got a designated retirement fund? If not, you know what's going to happen. When it is not designated as a retirement fund, it's like a cookie jar. When you need money for a new car, you dip in. When you go on holiday, you dip in. When you buy a new house, you dip in. When children's education time, you dip in. When you retire, what's left? That's the problem. All right. Why is EPF so successful? It's $500 billion. Moving on, you know, it's 550 billion anyway. Every month, 1.4 billion cash flows into the EPF. Why is it so successful? Because it's a designated retirement fund. It's not for you to fund any other things. Okay, there's account B which you can take money out, right? But that's not the idea. Because the more you take out, when you still have a capability of earning income, the less you will have in the future. All right? So what you reap is going to be what you sow. But by all accounts, EPF is successful. However, average balance in the EPF is 150,000. Okay, we'll talk about adequacy in a while, right? So I want to just just make the clear differentiation between EPF and PRS. The thing is, long-term investment scheme, good news. All of us here are marketing investment schemes, collective investment schemes. Right? For you who are involved in the unit trust, it's called unit trust. For us in the PRS, it's called PRS. But it uses the collective investment scheme structure, right? Which all of us are familiar with. Right? The collective investment scheme structure is the most safest, affordable investment vehicle for the mass public. Right? How else can you invest with 100 ringgit or 50 ringgit in an equity fund? Try buying an equity stock at 50 ringgit. You're not able to do that. It's a pooling of resources, all right? So note the word long term. That differentiates it. Okay, I know unit trust. We all say long term also, right? But how long is long? Average time, right? Right? But this is long term because it's supposed to be do not touch until you retire. What's the retirement age now? 60. So if you're 25, starting work now, and you are going to retire at 60, What is long term? 35 years, not 3 years. Average investment in a unit trust fund, 3 to 5 years. Then they switch, take profit, or get churned. Right? We all experience that. Come on, I've run a fund management company before. Right? So it's long term and it's designated as a retirement fund. For those of you who are financial planners out there, I think you agree with me, there are basically 3 financial goals in every one of us, right? 3 financial goals, right? We need money to enjoy our lives, that's for sure, right? What are these financial goals? Your lifestyle goals. You need money to fund your current lifestyles, right? Whatever that may be, buy the next Porsche, buy the next bungalow, right? Travel overseas, whatever that is, you invest for that. Children's education. The third one, no surprise, is going to be your retirement fund. Do not have just a generic fund, a general investment account, or a savings account, right, to take care of all these 3 needs. Separate it because it deserves to be separately managed, because the objectives, time tenure, risk profile, expected returns are all going to be different, right? So note that it is a voluntary long-term investment scheme. What's the big problem then? Now I'm talking to you as individuals, right? Retirement problem is about replacing our income when we do not work for our income anymore, right? We have our earnings years and we got our retiring years. So if you are employed, I know you're self-employed, you never need to, you enjoy your work so much, you never need to retire. But say you want to retire at age 60. Before 60, you're earning your income. After 60, what happens? What happens, right? All right, the rule of thumb is that you need 2/3 of your last drawn pay. 2/3 of your last drawn pay. That means to say at age 59, right, the year before you retire, whatever income level you're earning on a monthly basis, if you're earning 10,000 a month, you need 2/3 of that to continue to live the life that you've been accustomed to prior to retirement, the living standards. 2/3 means 7,000, right? Now why 2/3? Let's just skip forward a bit. Right? If you're no longer working, if I'm an employee, I no longer pay income tax. If I don't earn income, I don't pay ETF. I don't have to buy a tie, or ladies, you need to dress up for work, you don't have to pay parking, you don't have to pay for any work-related expenses anymore. So you have an opportunity to knock off at least 50%